I've got good news and bad news. The good news is that prospecting for DI is incredibly easy. Once you know how to qualify people, prospects are everywhere. The bad news is that prospects don't come to you. In fact, if someone comes to you asking for DI, you can probably trust your instinct and run. Chances are that person's uninsurable. Now, of course, we do have modified offers, exclusions, and ratings, and even in some cases, guarantee issue products that can be used, but that's no place to start. So we're going to stick to the basics today. Let's quickly review who's not a prospect. A non-prospect is someone who is not dependent on income. That means they could have a trust fund, a pension, or other investment income that basically means they have a work optional lifestyle. Not a good DI prospect. It could also be someone who already has DI. Now, there are tons of gaps with group long-term disability insurance coverage, and we'll definitely talk about that later. But for the sake of argument, it's best to steer clear of people who have tax-free group LTD plans, who have existing individual DI coverage, or even government employees who are fully vested in their pensions after just a few short years. So now you know who to avoid, the fully covered and the uncoverables. But what list are you even working off of to curate that real list of prospects? Well, the best audience is the one sitting right in front of you. Instead of waiting to be approached, you're going to have a lot more success if you take the initiative through marketing efforts to your own existing clients or network. So who are the best people to target within your existing list of clients? Well, that's easy. We've carved out the people with chronic illnesses, the people who are living the work optional life, and those who already have coverage. That means you can now talk to anyone of working age, dependent on their income, and who can qualify medically and financially. As indicated, some carriers do have a financial component, typically $30,000 or higher in annual income. I would stress you to aim higher. Premium constraints will pretty much sabotage any attempt to secure meaningful coverage unless someone's making $80,000 or more. And in California, $100,000 is really the best guidepost to be using. There's also an occupational component. Now, most domestic carriers will shy away from pilots and crab fishermen, entertainers, and athletes. We also have separate carriers for those folks. Instead, there are two unique markets that receive special attention from DI carriers. The first is the highly saturated medical market. They are told from day one of their residency that they should have a DI policy. Their unique specialization, their high incomes, and their exposure to people who are battling disabilities on a daily basis, think about that, means that they are quick to understand this need for this type of coverage. And carriers know this. So discounts run rampant and products are essentially tailored for doctors and dentists. The other segment that we have personally come to know extremely well is in the business owner market. Business owners work harder than anyone on the planet. They make good money and oftentimes spend that same amount, which makes them uniquely susceptible to financial catastrophe if they happen to take a step away from their baby, their business. So discounts or upgrades are available with most of the carriers, which means that they get preferred pricing. But the biggest reason I love working with business owners is due to the various solutions that are uniquely suited in their varying circumstances. Individual DI covers just their basic living expenses. Overhead expense covers their professional bills, benefits, and other employee salaries. Buy-sell covers equity purchase agreements. Contract indemnity covers their loans. Key person covers the most important employees and pays a benefit to the business. And group LTD plans cover pretty much everyone, all employees. So to review, you want to take the initiative. Market to existing clients. Refine your prospect list to people below the age of 65 who are in good health, both medically and financially. And most importantly, those who are reliant on their income. Bonus points for medical professionals and business owners. And if that's too much to remember, you can always use my dad's favorite acronym, LOVE, LOVE, which stands for Love, Obligation, and Verifiable Earnings. So I hope that helps you get off the starting block. Definitely feel free to reach out if you have any questions. We'd love to help.